Alrighty, what's going on, everybody? Happy Tuesday evening. Happy Tuesday. How's everybody doing? Good morning from Sydney. Yeah, man. Good morning, I guess. How's everybody doing? We got a busy week this week. A very busy week. I've been kind of waiting on this since I saw the calendar print out at the beginning of the year. And I'm very curious. I'm very anticipating very much what happens, not only as a trader, but also as somebody who lives in the US and seeing how much more they can screw this up. I am definitely going to be paying attention to tomorrow's news, Thursday's news, and Friday's news. If you haven't really looked at the charts in the last 2 weeks, you haven't missed much. Essentially, all of your institutions are, in my opinion, just hedging in. And they've hedged in buys and sells from ideally the area that they're all trading in, and we'll see what happens. We'll see what happens. My my anticipation, and I'll go through it. My anticipation is that we are going to get some fireworks. So I'll pretty much be done trading by the time New York market opens tomorrow. I'll be done for the week. I'm not going to try to chance anything. The last thing I want to do is get involved in an open trade and get some kind of slippage. So the last time I did that a couple of years ago, it cost me a lot of money. So I'm not interested in playing that game. But yeah, let's go into it. Fundamentally, this week, it's all about what the Fed is going to do and what the U.S. economy is going to show. We did have some news come out already on the Kiwi side. You can see their unemployment rate went up 0.1%. It ticked up from previous month. So that is showing a increase. And obviously I don't live over in New Zealand. I live in the United States, but that's showing that there is a little bit of rise in unemployment, which makes sense. I talked about it last week on the fundamental side, that as the funds rates increase, and the whole point of a funds rate increase is to bring down inflation. One of the catastrophic events that happen out of it is our unemployment market rises. Because the first thing that businesses do in a crunch time is cut labor, right? They're not going to cut profits. They're not going to cut materials. They're going to cut labor. So we saw 0.1% increase in the unemployment rate for the Kiwi, and you can see quarter over quarter. We actually it wasn't too bad. Quarter over quarter, it was 1.3, and this makes sense, right? When you're looking at it, the previous quarter, so Q3, it was a 1.3%, and then here it was a 0.2%, which actually is surprising, because Q4, this is the numbers from Q4. You're going to have your seasonal workers for the holidays, and they only saw a 0.2% rise. So yeah, definitely understanding what those numbers represent. It's not something that is very uplifting for the NZD dollar itself. But going into this week, you can definitely see, I don't imagine a lot of inflation numbers changing here on the ECB side. But tomorrow we definitely do have some OPEC meetings, so it's going to affect what the WTI, what US oil, what Brent oil are going to be doing. But what I'm really focused on is, we have ISM manufacturing. That's going to be released around 10 o'clock in the morning, but the funds rate. What I want to see is 2 p.m. Eastern, what they end up doing, if they do end up coming in with only a 25 basis point, or if they're going to sneak into 50. Everything I was reading today and diving into, my anticipation is they are going to come in with 25 basis points, right? I think they are going to do that. There's no way they come less than 25, not from everything I'm seeing. But if they do come in with the 25 basis points, I think what you're going to see is an appreciation on indices. I think you're going to see U30, NASDAQ, and SPX trade a little higher. You're going to see dollar definitely come lower. And if they do come in with the 50 basis points, get ready for a liftoff on the dollar. And you're just going to see a complete market crash on the indices. So we'll see what happens at 2 p.m. Obviously, the initial reaction is going to come out with the initial reaction is going to come out with the fund rate release. And then when the magician Jay Powell gets up on and starts doing his press conference, that's where you're going to start to see some emotional reactions based on what he says, right? So curious to see what happens tomorrow. I'm definitely going to be sitting idle tomorrow during New York session. I'm not going to be in any trades, but I do want to get the basis of what they're doing. I always listen to the federal funds rate release as well as the press conference that he does. You know, if you guys haven't seen it, just click on here. It'll take you to their YouTube channel once it's released, and you can listen to it live. So I'm going to be paying attention to what funds rate do here. Then, a couple hours later, Thursday morning, 7 a.m. prior to New York Open, the Bank of England is going to go ahead and do their official bank rate. And you can see they're pricing in 50 basis points. They're looking at going from a 3.5 to a 4%. So it's 50 basis points. Very curious to see what happens out of that if they do come in as expected. I'm not too sure what the Bank of England is going to do. The ECB, on the other hand, about an hour and 15 minutes later, is going to come out with theirs. And the ECB last week they had a press conference, and the ECB was pretty adamant about how hawkish they are on continuing to just slam down interest rates. And you can see they're pricing in a 50 basis point as well on the market side. So a couple of things can happen over the next 48 hours. And it really is going to be dependent on what happens out of FOMC. You know, I think for the most part, if they do come in with the 50 basis points, all of this is just going to be mitigation of the manipulation we're going to get. So yeah, it is going to be a very, very important week. And then of course, to round it out on Friday, we've got jobs reports, right? We got non-farm payroll, we got the unemployment rate, and you can already see their pricing in. I didn't see, obviously they didn't have this factored in last week. But they're already factoring 0.1% increase from the previous week. So, I talked about it last week and the week before. These job numbers now are going to be involving the seasonal workers for the holidays that are no longer employed. And one of the things I definitely talked about last week was, have you been able to watch a business channel, jump on a YouTube channel, watch any or read any kind of article like on Bloomberg, CNBC, Yahoo Finance, Fox Business? Have you been able to go one day without hearing of a large corporation talking about layoffs? And, I haven't. I've been paying attention to the labor market. I put it out on my Twitter maybe like 2-3 weeks ago, follow the jobs, follow the labor market. That's going to tell us where and when we enter and exit our recession. So I'm still pretty confident that we are going to enter a recession. I feel like that is going to happen. And it's really going to be on the backbone of the labor market. So obviously, as unemployment and realistically, I as much as I don't want to say I don't want unemployment to rise, I do want unemployment to rise. Why? Because that's going to force the Fed to reduce their interest rates. So, do you think that the Fed is likely to do do you think the Bank of England is, if the ECB, what do you mean? So you mean next month's, or yeah, I guess. So you're talking about like March's? I mean, I don't know. It really is going to be dependent on two things. The first thing that they got to look at is, where are the inflation numbers? So and remember, so the Fed, right? Jay Powell's already said that the target is 2%. That's what they need to get down to. They need inflation to get down to 2%. I mean, what are we sitting at right now? I want to say, where was the last inflation numbers on the US dollar? I think it was something close to like 8%. Let's see. Hold on. I want to say it was close to 8%, and we're still seeing it tick up, right? So if we do not continue, or if we don't see, we're seeing slowing down, and that's where a lot of these analysts are saying that we may avoid the recession, but we're still seeing inflation rise. I mean, the biggest thing for those of you guys that listen to some of those podcasts that I dropped on Odd Lots this past week, did a really good podcast on the price of eggs in the U.S. I don't know if any of you guys have gone and looked at the price of eggs, but they're up, I think, like 300%. And that is, I mean, that's not telling us that inflation woes are subsiding. So, these numbers, right? These numbers that the labor departments are releasing, again, they're surveys. And you have to take that with a grain of salt. Yeah, the market's going to react to it, but the market can only be manipulated by these BS surveys for so long before investors finally say, what's enough is enough. And I feel like the big thing that they're going to have to really just pay attention to is what's happening in the labor side. All right. But yeah, so for this week, I mean, we are rocking and rolling with a huge amount of fundamentals. And for me, the biggest thing that I am going to be paying attention to are, again, what are the rates, right? What are we going to do with all of these fund rates? All right. Are they going to come in with the 50 basis points? And if they do, great. That's going to, the 50 basis points is going to ultimately lead to higher unemployment. All right. And then eventually we can start to see maybe a curve happening where, they'll start to reduce some of this stuff. But, I envision, and, most analysts are talking about the Fed at least continuing rate hikes through the summer. What do I think of a 50 basis hike is for what, the Fed? Man, I don't know. I mean, the issue is, the market's pricing in 25 basis point, and they're doing that solely on the backs of slowing inflation numbers. So it really is going to be determined. And if you guys watch, I think it was the Kansas City, or it was the Sacramento president of the Federal Reserve. She was talking about how, she's going to be voting for a reduced interest rate hike, but that's one person, right? That's one person in all of the feds. So, I mean, we'll see. My bet is that whatever they do, it doesn't matter what they're going to do. Inflation is still going to continue. Right. Like I said, I mean, you go to any supermarket, you go to the lumber yard, and lumber is still up. You know what I mean? Like there is, I don't know where they're getting their surveys on inflation. I have no clue what they're surveying. I mean, maybe sand, maybe rocks. I have no idea. So what would trigger a recession in the market? Well, I mean, so here's where it gets tricky, right? Because a recession by economists, right, for the past century, really, recessions have been defined as 2 or more quarters of contraction by an economy, right? Which we've done that. I mean, I think the U.S. is now at, I think, 4 quarters of of contraction versus an expansionary move. And, all that's happening is the Labor Department is just redefining a recession. So I think the part where they're no longer going to be able to redefine a recession is going to be when we get unemployment to continue going higher. Right. And, again, I showed this last week. If you look at the unemployment rate right now, right, and the last recession took place in 2008, right? So if you look back in 2008, we spiked in 2009, right in here around 9 to 10%. And, realistically, the acceptable number, they want to be under like 3.5%. So as we continue to see that uptick in unemployment, this part right here, this is where we're going to be seeing. So I think for the most part, the next 12 to 18 months is going to present itself with high unemployment. And at that point, they're no longer going to be they're not going to do the Jedi mind trick and wave their hand and say, these are not the unemployment numbers you're looking for. So, ultimately, that's my expectation. That's what I've been prepared for. That's what I'm looking at. and, go from there. Now, if by some miracle they navigate out without a possibility of a recession, then great. I mean, I guess I'll miss the bottom on investments, but I'll play the continuation moves on them. I just don't see that actually happening, right? So yeah, I mean that's my take on it. The and go from there. So jumping over to the charts, right? Jumping over to the charts, I'll kind of show you like my thought process. And again, my understanding from the charts is they're all hedged in. I mean, they're in buys and sells at this point. You can see, starting with the US dollar. Let's get over there on the dollar. Bear with me. Let me just move. Yeah, hold on. Let me just move this down. There we go. Yeah, perfect. So starting with the dollar. And if you guys remember, I talked about this like 3 weeks ago now. I said that, where we're at with the dollar, I did not want to see like a 5-minute accumulation. I really wanted us to be in here for a while and really showing us that we're filling buy orders. Okay. Um, Am I looking at implied versus realized volatility? No. I'm not even looking at any of the volatility charts. All I'm looking at is the actual charts. I'm looking at the futures markets and seeing who's taking control and where are they filling orders in at. Does the Fed pausing raising rates help reduce inflation over time, or does rates have to keep increasing for it to? So no, if the Fed pauses raising rates and inflation is not on a downtick, right? If inflation's not, so the Fed will stop or slow its, well, okay, we'll do this. The Fed, if you think about it, right, it's not an exact science. The Fed doesn't want to overextend its rate hikes, right? Because it hurts the economy. So what they need to do is they need to find an acceptable rate of increase that essentially curbs inflation. So the Fed will not stop its rate hikes, right? Completely stop it. No central bank will stop its rate hikes until they have a level of probability that inflation, which is already on the downtick, will kind of, think of it like this, right? Think, you ever been on a boat, and if you're driving to the dock and you put the boat in neutral and it just drifts into the dock, right? They want inflation to drift down to 2%. So there's, I mean, obviously economists have a lengthy formula that they use to determine this. But again, it is just a guesstimation. So the Fed is not going to stop their rate hikes until inflation is on the down cycle. It's not. We're still seeing it increase. It's just, and if you look at it, right, the verbiage everybody is using, it's inflation is slowing down. It's not that inflation is reversed. It's slowing down. Yes, it is slowing down, but we're still seeing it increase. So that's ultimately where I'm at with it. All right. So anyway, I mean, if we look at the dollar, right, and you kind of pay attention to what the dollar is doing here, we are in a massive accumulation, right? The one thing that that I am continually to taking note of is, notice every time we come up, look at the reactions that we are seeing here. Every time we come in, we see these very, very distinct reactions of buy orders coming in. Hold on, guys. Give me 1 sec. I got to order Chick-fil-A for my daughters. Hold on. All right. Sorry. I had to order this on the app for them because yeah, it is what it is. Bear with me. All right, cool. Yeah. So let's see. I really wanted to see price jump over the trading range on DXY so I can be more. Yeah. Well, that's what this is the exact reason why they're in a hedge. They're in a hedge, right? They're in buys and sells. So what if the DXY broke the low again? Now I think I think before it breaks the low, it's going to take out weak-handed sellers. So I think honestly, I think we probably trade. You could see where I'm looking. I think we mosey in here tonight, and from there, I think news is going to do one of two things. I think we sweep out and take out any weak-handed sellers here, and then if they're going to redistro, they're going to do it like this. Or what they're going to do is we'll see something like this, news do something into here, and then the press conference takes it up like that. So I think that those are going to be the two. I think those are going to be the two things that are going to happen. So, and we'll see. We'll see ultimately what happens. Hold on one sec. Let me move. Give me one sec. Sorry, guys. Okay, cool. Alrighty. Yeah. So, I mean, ultimately, this is what I'm expecting on dollar index. They're hedged in. If we zoom out and look at it like on a 4-hour, I mean, you could see what's going to happen. They're either going to sweep out, they're either going to sweep out and then redistro, or they're going to come right in and skyrocket this thing up. So I can guarantee you this: if they come in with 50 basis points, we're taking this high right here. We'll be up here by Friday. So that's kind of my anticipation. And if you look at the COT reports on the dollar index under, like, for the institutions, since the start of the year, nothing has changed. They're percentage wise, they are completely how they've been since the start of the year. And there is I think I looked at it this morning or yesterday. There is I think it's like a 2% difference from December in longs. So, I mean, we'll see what happens. But ultimately, that's what I'd like to see, some kind of manipulation. And keep in mind, like, where we're at in this, there's nothing keeping this from sweeping one more time to take out weak-handed buyers and then doing something like this. So this is why I'm really not going to be trading much tomorrow, Thursday, or Friday, because I know between the next 72 hours, I know that there's going to be manipulation on both sides of it. So, and it's for me, it's not worth it. All right. So dollar index, that's kind of what I'm looking for. I want to see, first, I want to see, do we exit our trading range? And if we do exit our trading range, I'm going to be looking for some kind of mitigation back into whatever manipulation we get out of FOMC. And of course, if we go lower, right? So if we go lower, then that's why this alert is right here, because I would need us to break that alert right there. All right. But the one thing I do like stands out to me immediately, like when I'm looking at this, is just the volume of buy orders that are coming in. So when you see what's going on in here, they're testing it out, big buy order comes in, testing it out, buy order comes in, right? Accumulation, buy order comes in, accumulation, buy order comes in. We sweep Asian liquidity during London, buy order comes in. So I am seeing just a large amount of buy orders coming in and getting filled, right? When you jump over to like EU, I mean, it's pretty much the same exact thing. You know, we are seeing that price is still in a distribution. And yeah, we are seeing, this walk itself down, but just keep in mind, like all we are is right back into this reaccumulation here. So even though we have this distribution, what I'm looking for is I'm looking to see out of this Frankfurt to London candle, is this their X marks the spot? Is this where they want to come in, and do they distribute from here to send this down? That's ultimately what I want to see happen. Is I'd like for us to get up in here and short it from that. Okay. This looks pretty clean to me on what they've done. You've got price that has ultimately distributed, broken some level of order flow, came in, we swept out of this redistribution, we swept Asian liquidity, we played into the previous slingshot that caused this break, and then we sent this down. So for me right now, this is all I care about, is this right here. Nothing else matters to me. And if they can come in and distribute out of this, this is going to be probably my X marks the spot, my high probability for this to go lower. I feel like if they take this London high, that's it. This thing is just a massive reaccumulation in the making. That's our creek, right? They've played into previous area of demand, and we're going to go higher. When we look at Owanda versus FXCM, we don't see gaps. Yeah, FXCM gives you the gaps. Owanda doesn't. Do you expect price to rebalance gaps between candles? I mean, they could, sure. Yeah, I mean, there's no, like when you look up, in the manual, will the gaps get filled? It doesn't tell you yes or no. Is there a likelihood that it's going to? Sure. Why? Because the gap is there for a reason, right? I mean, there's still orders in there. We just, because of the weekend, right, or because of slippage, we don't see those gaps. But all you got to do is just go over to the future side, right? You want to look to see where the gaps are, just hop over there, right? Look at Euro futures, and it'll tell you exactly where the gap is, right? If there is one. You want to look at dollar future, right? Look at the dollar future and see, is there an actual gap in there? Because this is the actual market that's being traded on. On FXCM, yeah, I'll tell you right now, I don't put a lot of faith into FXCM's feed, because they're just a broker, bro. I'll take, when in doubt, I always revert back to the futures market. Some brokers' price are not the same. For example, if I got to buy over at 3,000, maybe. Yeah. I mean, this is all just a, yeah, they're offering just CFDs on it. So I always go off of what the futures contract shows. All right. Yeah. So some institutional banks expecting EU to go to 1.10, maybe even higher. Yeah, I mean, I sounds good. If institutional banks are expecting that, are they moving it up there? If they're moving it up there, sounds good. They'll get it up there. But I mean, yeah, it all depends on, just keep in mind, right? For them to want EU to go up there, that means that they are buying up Euro futures. So that's up to them if they want to buy up Euro futures, man. My area that I'd really like them to get up to is going to be right here. This is where I'd like them to get up to. So I'd like them to get up to like the 113 to like 114 area. This is where I'd really appreciate it. But I just don't. I mean, if the Fed comes in with 50 basis points, you can wish upon a star all you want, but it ain't coming up here. If the Fed gets up to 50 basis points, this thing, before the end of the day, this thing may be below like 105. So yeah, I mean, ultimately it's really going to be, the decision is going to be made by the Fed. With DXY weakness, looking at this with DXY weakness. All right. Sounds good. But yeah, I mean, if institutional banks are expecting to go up, that means that they got to buy it up there, right? Because they're the ones that are going to move it. So they got to put their billions where their mouth is and start buying this up, Yeah. I mean, like I said, I'd appreciate it. This is what I want. That's where I want us to come. I've been waiting on that for a very long time. So if that can get up there, great. But, again, tomorrow, no matter what the technicals say, tomorrow is going to be really driven by what the Fed is going to institute, you know? So yeah, we'll see. And then again, ideally, if they do bring this lower, this is going to be the very first area we got to see what happens, because they can easily just come right in here and accumulate to take this higher. You know, so that's ultimately what I'm going to be paying attention to. And on the flip side, where the dollar is, same thing. What happens in this redistribution right here? They could take this up all they want, but if they can't get through these sellers right in here, then this thing is just going to keep going lower. So that's my plan with it. I definitely short term, I want to see if this can at least come into here, and then I'll worry about maybe next month when we get up here what I'm going to do with it. But that's my game plan with EU and with dollar. On the pound side, so pound's a different story. Pound is still very much bullish for me. And yeah, I know we did come into my higher time frame. Well, not my higher time frame, more like my intraday point of interest over here. But nothing about the pound yet is telling me weakness. And you can kind of see what I'm looking at. Yeah, we do have a distribution here, but ultimately, I want to see what happens when we get down into this accumulation or into this reaccumulation here. I want to see what happens. Um, if price, if price does walk itself down, I'll be honestly looking for buy positions. Ideally, out of here is where I want to come. Right. I'd like for price to get in here. It's 50% of this move right here, and it's 80% of the whole move. So this is like my X marks the spot. Part of the reason I'm bullish on this is I'm obviously bullish on, if dollar comes in at 50 basis points, I'm bullish on dollar. I'm bearish on the euro. I'm also bearish on EG. So I'd like GU to kind of continue with some bullishness so I can continue to sell EG. All right. So we'll see. We'll see what happens. And again, I mean, just looking at this, we have no weakness on the pound yet. I mean, we're here. That's the leg that we're in. And, yeah, could this just be a complex pullback to maybe come in here or in here before going up? Yeah. That's where I'm sitting at with it. On AU, right? Continuing with majors on the AU front. So, and we can see like AU is in my point of interest where I want to see it. Same thing like GU. No weakness at this point, right? I mean, we are just making lower highs, working this up like this. So until price gives, we do have a really clean distribution up here, but until it does something, until it breaks, the order flow here, which is in this leg, I mean, we're still bullish on AU. Now, it's a little different story when you get to like NU, because NU is telling us a different thing, right? NU is definitely starting to show a little more weakness. Again, the big, I guess, decision for me is what happens when we get into here, right? I do like how price is distributing very cleanly, and I do like the fact that we potentially will make this low. I did have my point of interest up here. We missed it, by, I don't know, like 50 pips, but we still came into the proper area. And, when you look at this, when you look at like NU on a 30-minute, just what we've been doing all week, it's just really, really clean, right? I mean, this is very, very clean price action, very easy to see who is really driving this market. The manipulations are very clean. What happened in here, price coming in, tapping in perfectly to that 80%. And then from there, just walking this thing down. So I am looking for shorts on AU and NU, and it's mostly driven. Well, I'll change the bias if the Fed comes in at a 25 basis point and Euro ECB comes in with the 50, because at that point, Euro is just going to kind of overtake what's going to happen. But if everything comes in how I'm kind of anticipating, this thing is just going to continue to ride down. Unfortunately, I was really hoping that we were going to sweep some Asian liquidity and come into this Frankfurt London price action right here so that I can distribute it and take it down. It's not looking like it wants to do that. So, and of course, this has probably everything to do with, because this was the news from, I think it was, right? right at four. Yeah. So this is what happened with the unemployment rate, or I'm sorry, the unemployment hike by 0.1% on the Kiwi unemployment numbers. So what I'm going to be looking for on NU is short term. What do we do? Do we make a new low? Because if we make a new low, I'm going to be looking to play back into today's New York price action. If we don't make a new low, then this is still where I'm going to be paying attention to when we get in here. And again, you can see like the Kiwi is definitely leading this charge. Look how well put together this is. You jump over it on AU. And AU, yeah, it's telling us, especially in this distribution up here, it's showing us pretty clean price action. But until we actually break something, right? Until we actually take this market just a little bit lower, and ideally I want to break through this accumulation. It's the same thing like GU, right? We are ultimately just still in this move that has now created this high. All right. So I'm going to be really paying attention tomorrow afternoon to see where dollar takes us. Again, when you look at AU, NU, and GU, they're not being really driven by the dollar. Obviously, they're being driven by their futures chart. So EU right now is the only one being driven on the higher time frame by the dollar. Now, you come over and you can kind of take a look at what happened in that Frankfurt and London price action. And what I'm talking about is this right here, right? This Frankfurt that swept Asian liquidity, London that came in, swept this Asian liquidity and caused that high. That is specifically what I'm looking at. And it's the like January 30th price action during Frankfurt and London. So you come over to EU and it's this price action right here that I've got highlighted. Right. That's the price action. So the dollar's definitely driving. Obviously, it's diametrically opposed. So it's driving EU. You go over to GU and it's the same price action, right? This is the January 30th. Let's catch it up. There we go. This is the January 30th candle right in here, that Frankfurt to London. There we go. You go over to AU. Now, AU is a little different, right? AU doesn't really give. Come on. There we go. AU doesn't really give any kind of manipulation here, right? That's that same price action. But you go to NU and it's the same exact manipulation, right? Swept the high, and you can see this is it right here. Swept the Asian high, right? Swept the low and then collapsed. So when you look at where the sell orders kind of started in, it's in this move right here. So short term, dollar is definitely driving this, and it makes sense with all the news coming out. All right. So this is kind of my game plan. This is what I'm going to be looking for if we are going to take this lower. And, of course, if the Fed diverts and does not throw in the other thing that could happen too is the Fed can come in at 25 basis points. ECB comes in at 25. And we got a different story, right? I think we stay status quo. I think everything stays the way the technicals are lining up for, if the ECB comes in at 25 and the Fed comes in at 25. So dollar crosses, that's what I'm looking at. All right. On UCAD, now UCAD's another thing that I'm looking at, right? Because of what the Canadian dollar is doing. And if we zoom out, right? This is what there we go. This is what I'm looking at. All right. So we are in an accumulation, and really we don't confirm the accumulation as of right now, because we haven't really swept out that low. But as of right now, this is what I need to break, right? This is what I need to see break. And the reason I need that to break is because this is our low currently, and this was the previous low. So that's my high that I need to break. Now, if we do this could be my spring. Now I'm going to move my alert from here to this, and I'll wait for price to kind of give me something like that. And we'll see what happens. Now, UCAD, not so well put together. I mean, I'm not too impressed by what's happening. I mean, we do have some signs of strength coming into this, but nothing too crazy, and you jump over to CAD futures, right, which is just UCAD inverted. You jump over to CAD futures and, you got to ask yourself what's going on. Well, I mean, technically it looks like they're attempting a distribution. But what's missing? It's missing really any big signs of weakness. Just like on UCAD, you're missing just massive signs of strength. So we got a 4-hour order block waiting below that spring on CAD. You got a 4-hour order block. Okay. I'm guessing you're talking about this, bro. Is that what you're talking about? It's the same chart, bro. Yeah. CAD futures inverted here. Yeah. I mean, yeah, this is the CAD futures chart, bro. Hold on. There you go. So there's UCAD. So is that what you're talking about right up here? Yeah. I mean, we're just playing order flow on this part, you know? So, ideally structure is here. If this is the UCAD chart, right? This is structure for me right in there. You talking about this one? Yeah, you're going to be waiting a little bit longer for that, man. That's not going to happen for a while. So yeah. Yeah. I mean, this is all just order flow in here. So yeah, I'm honestly still holding some positions from in here. But yeah, we'll see. We'll see what happens. I don't envision us getting down here probably until March. So I mean, we'll see how this moves. But yeah, on the CAD side, UCAD, I'm going to watch. I'm not looking to try to short it down unless we come into that supply point, right? Um, NCAD and ACAD, I'm really not looking at anything yet. I'm going to wait till after. Um, I'm going to wait till after this week to kind of put this in perspective. I'm kind of just sitting back. I mean, NCAD did do a lot that I liked. It did get into some of the points. It did give me a nice little distros. But I'm going to be at this point, I'm just going to sit back and wait. I'm kind of just waiting to see what we do if we get past this. So, and you can see just across the board, the Kiwi is definitely leading the way in weakness as opposed to the Australian dollar. So, you look at NCAD, look at NJ, I mean, you could see NJ here, NJ showing a lot of weakness coming in as well. The Kiwi is where I kind of want to pay attention to on the Australian side. It's just not giving its weakness yet. All right. Going with, I talked about UCAD. I'm also looking at CAD Chef. And one of the things I'm looking at CAD Chef is if we continue with CAD weakness, it's simply just play continuation move. So, one of the things I wanted to see if we can get back up into this distro. I had my area up here marked out. We never got into it. But then we did start to distribute this week, and you could kind of see like what I was anticipating. At this point, I do want to see if we can still come back into this move right here. Nothing really happened in the last 24 hours. We've just kind of just evenly traded down. If it does come back up here, this would be an ideal spot that I'm going to be looking for shorts. And then, of course, I need to target coming into this accumulation. And hopefully we can break through it. If we can get through that accumulation, then we essentially confirm our distribution and looking to take this lower. So that's my game plan with CAD Chef. And then of course CAD J, again, this is all based on what UCAD and CAD futures do, because I'm looking to short CAD J and CAD Chef, but I need UCAD to cooperate, right? So you can kind of see what I'm looking at here. We are in a distribution. I wanted to see one of two things today. I wanted to see, can we break this low? And if we do, I want to play out of this distribution, right? If we don't break the low, what I need to see is I needed to see manipulation. And honestly, like this really doesn't give me a ton of manipulation above these highs. I know we trade above it. Here, hold on. I know we trade above it, but it was just ever so slightly. And the first thing I ask myself is, did it shake out weak-handed sellers? And my answer is, I don't feel like it did, right? So hold on. Like when we look at what this has really done, that's your break, right? I think it actually, if we go over to, yeah, there you go. That's your break. And I don't feel like that's a massive shakeout, So I'm just going to sit back. I'm going to wait. I am interested in seeing, hold on, give me a sec. There we go. All right. Bear with me 1 second. There we go. Sorry, I had to mute my ring cameras. I'm not really seeing this as a massive sign of weakness. In reality, what it looks like, it's this accumulation was the shakeout to take out, your weak-handed buyers and potentially a reaccumulation. So you don't think it breaks? It does. Yeah, it does. Did you look at it, or are you just eyeballing it? I looked at a couple feeds, and on Awanda it doesn't. If you look over at, I think it was like forex.com, I looked. Yeah, forex.com comes in. Actually, no, on forex.com it's equal highs. So either way, no manipulation, right? It doesn't shake out weak-handed sellers, yeah. So, it goes back to, I'm not going to treat that as a UTAD because I don't think it is. So what I need to see now is I need to see, and it sucks because this is 100 pips to get down to here, you know, um, maybe we do something here, maybe we do this and then the break, and then that gets me involved, right? If we do that, that gets me involved. So if we don't do that, if this thing just comes all the way down, I feel like I need to wait for this break here, or I need to wait regardless, I need to wait for that break because I'm not really interested in trying to buy this. I'm very bullish on yen right now. So all the yen crosses I'm looking to short. Um, and yeah, CAD is setting up. It's there. It's not my favorite yen cross, but they're there. You can see kind of what's happening with them. And they're all moving in unison. You look at AJ's doing the same exact thing. Right now, AJ's got a little more weakness, right? There we go. We broke this morning, the low. And obviously, like, what I'm looking for is I'm just looking to see, can we get back into this area, right? That's where I want to see. And if we do, great. I'm going to continue to try to short this. And then, of course, NJ being the leader, NJ has already shown us that massive weakness. And NJ is actually going to break that low for me right now. Yeah, it's going to break the low right now. So hold on. Let me just move this. There we go. So NJ just broke, and that's kind of what I wanted to see. We had price give a distribution, right? It took out a little bit of demand. It came back and distributed out of that cause of that break. And then what do we have? We have that distribution / redistro on the big front. So what I'm going to be looking for now is, do we come back into this New York price action here, or do we play out of today's New York price action? That's ultimately what I want to see. Either way, it's gonna involve, I need to wait on price action. I need to wait for schematics to present. There's no limit orders because I'm just playing the order flow here. But when I look at this, you can definitely tell sellers are involved, and ideally what they want to do with this. And then the other one that I'm also looking at is EJ, but EJ is a little bit of a ways away. So EJ, same thing on EJ. I'm looking to short these, and you can kind of see my thought process on this. We had the type 1 distro up top. We really didn't do anything, didn't invalidate any demand. We still haven't invalidated any demand here, right? But what we have done is we've redistributed, this being our shakeout. So now I need to wait for this break here. And like I told this morning to you guys that were with me, if we're going to break this, I need us to break that as well. That's what I want to see. If UJ is distributing, doesn't that mean DXY is distributing? No. If UJ is distributing, that means that yen futures is accumulating. The DXY and UJ have no correlation. So if you look at UJ, right? If we go to UJ on a 4-hour, right? If we go to UJ here, and then I'll throw up yen futures. Let's go 4-hour, and I'll throw up yen futures. It's the same chart. So if I invert the yen cross and I line it up, let's see, and I line it up, it's the same exact chart. So if UJ is distributing, that means that the yen is accumulating. So, which is what I'm expecting, right? I'm expecting bullishness in the yen, and that means that everything against the yen is going to be bearish, right? So that's ultimately what I'm looking for. And since we're on UJ, I mean, I'm not doing much with UJ quite yet. I am looking for a potential short on it, but I think that like AJ, NJ, CADJ, EJ, I think they present just a better clean price action, because at this point here we're doing nothing, right? I mean, you can kind of see we've been here since the end of December, just sitting in here, and we really haven't done anything. We're making lower highs, yet we've come into some supply and we're properly distributing. So until something gives, I'm really not interested in doing much with UJ. So EU and DXY are correlated because EU makes up a huge part of DXY. Yes, yeah. So the euro is 62% pegged to the dollar, and that's what it makes up. So yeah, yep. So that's why no matter what happens, like if dollar is accumulating, that means that the euro is distributing. Yeah. Yep. Yeah. So that's kind of what I'm looking at. So yen crosses, I'm looking for those shorts. Depending on what UCAD does, if UCAD continues showing me some bullish intent, then I'm going to be looking for shorts on CAD Chef and CADJ, as well as the buys on UCAD. And let's see. Was under the impression that DXY affected everything, like AU, UJ, UCAD, etc. Yeah, I mean, just look at it. Look at the price action on multiple time frames, and ask yourself: Is AU being driven by the dollar? The answer for me, the answer is no, right? Look at UJ, and I guess the question would be this: what gave you that impression that the dollar affects? I mean, I do agree with you. The dollar affects everything. It does. The dollar affects every currency. However, what is driving AU? It's not the dollar. What's driving UJ? It's not the dollar. What's driving UCAD? It's not the dollar. The only thing that the dollar is currently driving is EU, and to an extent at the current, I guess, we'll say maybe like the last 6 months, the dollar is also driving the indice market. So equities, the differentiated between affecting and driving helps a lot. Yeah. I mean, all you got to do is look at every, so tomorrow during FOMC, right, at 2 p.m., come back 30 minutes later and look at every chart, and you're going to see there's a reaction, right? Something's happened. So the dollar's affected it, but it's not driving it. Is this the correct top down on NU? Let's see. The correct top down on NU. So is this what's maintaining one leg? Yes. You broke here, so you're here on that leg. So if I do it in color coordinations, you're there, then a lower leg is here, and then so then you were here and you broke here, so now it's here, and we haven't had a pullback back into it. So yeah, I would put, if that makes sense. Yeah, this for me is my SC that caused that break, and this distribution here is what's maintaining this right here. But you're still bullish from this right here. And yeah, I mean, this is an order flow leg. Does that make sense? Yeah. So there's no lower time frame leg or injured. I mean, it depends on how you want to label it. I mean, for me, this would be my intraday. Oh, this would be my intraday here. And I would label this as my lower time frame. And then this would be my order flow leg right here, because this is the SC. So it depends on how you want to label. I mean, I can label it lower time frame. You can label it, XYZ. And as long as you understand, yeah, like that is still the leg because of that break, and you're still bullish from here in this leg because of this break, and you're still overall here. So when let's just say hypothetically we come here and do this, right? So you go from here to here to here to here on one leg, and then because this leg here now breaks, you go from here to here on that leg, and then on this one here that comes here and then does that, you now become here on that leg. So yeah, if that makes sense. Yep, you got it, man. Yeah. So I mean, ideally, that's my game plan is with what I've got here. That's the game plan. And then of course, I talked about EG. I am looking at EG. And what I'm looking at is, so just a little bit bigger picture and perspective. We do have a really clean distro. It's in a nice little point of interest. We did confirm the type 1 right here. So what I wanted us to do was come back somewhere in here. And that's what we did. Unfortunately, this distribution is garbage. So my two options are this. My two options are, I feel like we could come higher, right? I feel like we could come into here, which is also into here, right? We have a lot of confluence right here. So I feel like we could come higher. If we do great, that's, it even makes it better because that's my line in the sand. If we don't come higher, ideally what I'm going to be looking for on EG is this exact thing right here. I want to see, do we show some kind of distribution? Ideally no, I don't want to do that. Do we show some kind of distribution in here, right? And if we do, great. And if we don't, I without a doubt need to wait for this low to get taken, right? So we either come up here and give me something, or we need a collapse and break and confirm a redistribution. So EG, I'm still trying to catch a decent short on it. I would imagine that between FOMC is going to affect this, right? ECB release is going to affect it. Bank of England is going to affect this, and NFP is going to affect this. So, for me, it's just going to be wait until probably Monday next week to figure out my game plan with EG. But ideally, this is what I want to see, and if one of these two things happen by Monday, I'll be in a really good position on where I want to get in, and obviously, managing it is just going to be taking it down to a new low. So that's ultimately what I want to see on the euro pound. And then equities, right? Looking at like indices here. I mean, this is pretty, for me, like I said, they're hedged in. What do I think, or what do I feel is going to happen here? We are, here we go. I wanted us to take out this high in here, which we did. We came in at 50% of the whole move. Could we come up into this 80%? We could. However, I feel like if we do, I think this is just going to go higher, because nothing in this is really screaming at me weakness, right? Nothing about this is really telling me a lot. Now, if Fed comes in with 50 basis points, I could care less what this thing is doing. We're coming down, right? And again, like they've hedged in sells here, they've hedged in buys here. This morning's news really gave a really clean reaction off the 50%. They have accumulated in here nicely. So I feel like they're just waiting on whether or not they're going to take this higher or take it lower. And my inclination is, we trade a little lower tonight. And then depending on what happens, we're either going to sweep up or we're going to sweep down. If we sweep up first, I feel like that if we do this, I feel like that's going to be the manipulation that takes us lower. If we sweep down first, right? If we sweep down first, I feel like they're just going to mitigate and we're going higher. But U30, I mean, U30's here. It is what it is. I think, NASDAQ's at, obviously the weaker of the three. It's still if it's still an increase, why do you think a 25 basis point increase equities in the 50? Because the market's pricing in the 25, and the 25 would be a slowing down of the rate hikes. So it's for investors, it's indicating that we are coming to an end, right? Because you don't go to 25 and then say next month we're going to a full point. We've slowly, this will be the first 25, and then potentially maybe we get one more 25, and then maybe we get nothing. If you listen to what the Bank of Canada said last week, they're actually going to pause. That's what they said. They're going to do a momentary pause of rate hikes, and they're going to allow the data to tell them what's going to happen. So, a slowdown is just, it's foreshadowing what's going to happen in the future, and it's going to give investors I guess it's going to give them a very positive tone on what the economy is doing. Now, if they come in with 50, that's telling you that the Fed is just going to continue to hammer the economy. It's going to hammer, the rate hikes, which means, businesses are going to have to cut costs somewhere, right? They're not going to be able to borrow as much. Their payments, their loan payments and stuff are going to increase. So that's why. All right. So on U30, I mean, I'm kind of just going to sit back. I'm personally not going to trade U30 the rest of the week. Same thing like SPX. You look over at SPX, and again, pay attention to the earnings reports, right? I'm no economist, right? But McDonald's earnings reports were above margin, right? They're above what the anticipation was. Well, why? Well, because the cost of eggs is up. The cost of meat's up, the cost of everything's up, but you can still go to McDonald's and for $2.99 buy, a double stack or whatever the heck they sell there, So, more people are shopping or purchasing, from these fast food places because they can't afford to do anything else. You look at, like I talked about the price of eggs, up 300%. So that's something to pay attention to. Same thing here. I talked about weakness. We really don't have weakness on the S&P 500. Yes, are we in the area where I'm anticipating, we could be doing something? Sure. Could we play into this? Yes, we can. But nothing about this is telling me weakness. And so we've got sells in here, right? And we got all the buys in here. They're hedged in. We're just going to wait and see what they're going to do. Depending on what the rate hikes are, and like I said, this morning, I personally didn't do anything this morning with indices. I was looking for a short, but the minute news came out at 8:30 this morning, and the index showed that there was a 1% increase in pretty much in the employer cash. This kind of told me, especially when they accumulated right here at the 50, told me, all right, yeah, we're going to go higher today. So I was looking, in this redistribution, but distribution never confirmed. We never got the break of structure. So we'll see what ends up happening in here. But ultimately, I am not seeing any weakness in the S&P 500. Anyone see what Michael Burry posted an hour ago on Twitter? No. What's he calling for? For a sell? Yeah, I mean, listen, I mean, a higher time frame, I'm with you, I mean, just look at what we're doing, I mean, higher time frame, all we did was just come into this point of interest. We could still come up here, so I mean, it is what it is. I'm still, when you break down what is happening, right? I mean, look at NASDAQ, for instance. When you break down from a higher time frame what's happening, yeah, I mean, we're going lower, right? I mean, just look at NASDAQ. I mean, we still have a little bit of ways to get up here into like this 50%, before potentially seeing the next drop. And if you trade indices, I mean, I definitely suggest you look at a couple of things. Look at one, what major companies make up that index, and then look at their earnings reports and look at what's happening. I mean, most of you guys, I mean, I know I talk about this all the time, but just look at the major ones. Look at Apple, right? I mean, what's Apple showing you? Is Apple showing you, man, investors are getting into this? No. I mean, Apple isn't. Apple is showing me that they're going to continue to come lower, right? We're going to continue coming lower. Ultimately, what we're going to be probably seeing is they're going to be coming into this COVID low, right? This is where I'm expecting. I mean, you could see I've already got marked out because I'm probably going to be buying some Apple, but where do I think Apple's coming here? Why? Because we're in a massive distribution, yeah, he is like Mr. Short, man. Yeah. The day he says bye, that will be yeah. So I mean, Apple, I mean, look at this. I'm looking for Apple to come down here. You look at Amazon, right? What's Amazon doing? Is this indicative of, and Amazon's already taken the COVID low, right? This was the COVID low. So, is Amazon showing you any signs of wanting to buy this? No, I mean, it's an act. There was a distribution. There was an active redistro. I personally still see this coming down some. Look at so Caterpillar missed earnings this morning. I don't know if you guys paid attention to this, right? Caterpillar missed earnings. And when you look at Caterpillar, what does this look like to you? Massive reaccumulation, right? Super clean reaccumulation. So what's my anticipation? That we'll probably come back down into this, right? We'll probably come into that. Now why is Caterpillar, very, very bullish? Well, I mean, just think about what's happening, right? What is Caterpillar? What kind of company it is, you look at some of these other ones. I mean, Facebook, how many of you guys have paid attention to what Facebook's doing? I mean, this thing has crashed below COVID low already. This thing has, let's open it up. There you go. This was the COVID low, right? This was the COVID low. Everyone talks about how, Bitcoin's a scam and this and that. And Bitcoin is down, I think like something like 63% from the all-time highs. Just look at this thing. This thing was down 76% from all-time highs. So what's the anticipation? The anticipation is we're coming right into this, which caused this break, right? And potentially get one more leg down on Facebook. So like your FANG stocks, right? Your Facebook, your Apple, Amazon, your Google. I mean, look at Google, right? I mean, Google on the tech side, this is why NASDAQ is so much weaker on what's happening, is because where do I think Google's coming? Yeah, same thing, right here. We're coming around the $65, $63 mark is where I'm going to start maybe looking some more, at Google, but yeah, this is why I'm bearish indices. I'm bearish indices because the stocks that make up these are in massive distribution, and until I see evidence of, some bullish intent, I'm really not interested in trying to buy this up yet. Can I look at BTC? What do you want to see on BTC? Yeah, I mean, I'm still bearish on BTC. Nothing's changed. Yeah, we're at 23,000. Nothing has changed for me on BTC. It's actually right in the area where I was anticipating it to come before our next leg down. So just a look. All right. Well, here's your look. I mean, yeah, we came in. I think I talked about it last week or the week before. I said that we were going to sweep out this and we're going to come into this or potentially even this before our next leg down. So yeah, I mean, I agree. I mean, I think that's where we're gonna go. I think this is just a massive. I do want to see. Realistically, I do want to see us take this high. I think at that point it'd be a massive bullish trap, and I think that'll get short sellers to really flood some liquidity in and take this lower. So yeah, you're still learning the concepts. Okay, yeah. I mean, BTC really, I mean, I would stick to the other charts other than crypto, because just remember, there is no institutional orders that are coming in to BTC, right? The SEC didn't allow the ETF for institutions to purchase it. So there isn't a tremendous amount. These are all just the smaller algorithms. And when you look at it, like this in here doesn't just scream to me a bunch of buy order volume. Probably what happened is some big whales came in just to move this up so they can probably get up into here and then short sell it down again. Yeah, for me, I'm very adamant that we're coming down into here. This is where we're coming. Hopefully we can get sub 10,000. And ideally for me, if we can get into like the 55 to 58 range, I'd be really happy, because this is where all my buy orders are sitting, right in here. So if that happens, great. But yeah, I mean, that's my thought on crypto. I mean, I'm definitely going, and I'm continuing to crypto mine. I'm getting as much as I can coin wise. And yeah, I mean, if I can continue to hold my, just build up my bags of what I'm holding, the better. You were looking at 10K. Yeah, I mean, I wanted to go below 10K. 10K is just kind of like a nice round number where I think we're going to get some buyers coming in, but I think eventually we'll sweep that out. So, but yeah, I mean, this is pretty much everything I'm looking at. This is what I've got on the agenda. And again, fundamentally, everything is going to be on the foothills of what the Fed does, what ECB follows, and Bank of England follows. So just keep in mind, like, the decisions have already been made on what the rates are going to be this week, right? They've had their meetings already. They've had their closed door meetings already. So, what they end up releasing and then the market's reaction to that, we'll see what happens. And then of course, keep in mind, like, what is going to cause these central banks to slow the rate hikes. Inflation is still going up, right? PPI, CPI data, all that is still going up. At the point where we start to see it now go down, right? That is where we can say mission accomplished, right? Rate hikes worked. Unfortunately, and this is, that circle of economics that I talk about, with rate hikes, the first thing that happens is what? Labor. We get an unemployment rate that skyrockets. So as the unemployment rate skyrockets, now central banks need to decrease the rates. And, obviously, what you want to do, especially from an investor standpoint, anybody that wants to get into real estate, anybody that wants, to essentially like spread their investment wings, if you will. What you want to do is that's where you want to start paying attention to, especially in the housing market, because as rates skyrocket, the prices, right? So if rates skyrocket, then the prices decrease, right? And what you want to do is you want to try to find that medium where you can, because you can always refinance rates, right? But you can't get bottom dollar for what you're trying to buy. So that's what you want to try to get into. And that's obviously what I'm waiting on. Gold. Yeah. Gold has been sideways for like a month. What do you want me? What are you planning on doing with gold? What are you looking at? I mean, I looked at silver the other day, and I think silver looks a whole lot cleaner. Where's silver? Yeah, here's silver. Silver's looking a whole lot cleaner. We are in the redistro. And we're starting to show signs of distribution. So I do like the shorting opportunity. And if you look at COT reports, there's not a lot of buyers still flooding in with volume. Now gold on this side here, I mean, you could see it's really not showing much of anything. It's actually still showing a lot of bullishness in it. So, I mean, that's where you're at with it right here. And what did it do? It just traded right back into demand. We accumulated perfectly in here. So for me, this is what I'm waiting on, is just this break. So if this breaks, then I'll start looking at gold, but this ain't happening this week. I mean, just think how long we've been here. We've been here for 15 days. So I got to wait for this break before I do anything with it. Yeah. That's pretty much everything I'm looking at. Gold up. Yeah. Do I invest in real estate? Yeah. Yeah. Are you considering shorts on? Yeah, yeah. I'm not looking at buys, man. Yeah, I'm looking at shorts. I'm more interested in trying to short silver, but yeah, I mean, my plan on gold is to get it down. My plan on gold is to get it down in here. So sub 1500s. So I'd like to get somewhere, again, I mean, just look at what we've done, all-time high here. We've pulled back, we've mitigated, and we've confirmed redistro. So now we're pretty much right where I want it to be. Obviously I wanted a little higher, but I think we're playing into here. So the game plan is, right here, 1500 to like 1580 is where I'm expecting the next push. And, more so on silver is where I'm really want to get into, because silver, yeah, silver, I want to play, silver didn't make an all-time high yet, so silver is the laggard. And, this is where I'm anticipating silver. So you can kind of see how we're just walking this down on silver. And yeah, we're in the redistro, so, and you look at what silver's doing. Let's see. Yeah, you look at what silver's doing. And I mean, as soon as they can break this right here, I think this thing is just collapsing. So, you know, um, gold will what if we get a 50 basis point? Gold will if we get uh will it break the low? So here's the issue with the metals markets right now. And this is why I really haven't been focused on metals the last probably like a year and a half to 2 years. The problem with the metals markets right now is gold is not being treated as a safe haven, right? So in previous years, in previous like recessions, in previous periods of uncertainty, gold was looked at as a safe haven, right? And it's still designated as a safe haven. But what in the last, like say in the last 2.5 years, 3 years, what has been the go-to as far as safe haven? It's been the US dollar, right? So I really don't know if, I mean, I know there's going to be a vast, there's going to be a very decisive manipulation. I just don't know if that is going to be like the nudge to get gold to kind of like just keel over, or if that's just going to cause one more push to the upside before the next low. So yeah, but I mean, realistically, just look at it from this perspective here, right? We've had periods of, let's just look at 2022, right? So in 2022, right, gold at the beginning of the year was very bullish and then became bearish, right? Became bearish. And I know in this time here, dollar was bullish. And that's why when you look at what's happened, money was flooding out of all of pretty much all investments in getting into the dollar in this part right here. And you can see that reflected in COT reports. What I'm not seeing is when you pull up COT reports on gold futures, you're not seeing a flood of money anymore, right? I would say, and I looked back in December. So I looked at December and January's week over week, and you're seeing more money percentages of total shorts being brought in by institutions, where we saw the same thing here, right? So if you go back and you look at December and January's shorts, and then you look at I think it was February and March's shorts in here, you'll see that the percentages of shorting by institutions is almost identical. So that's something I was looking at. Looking long currently. It's looking long currently. It's looking long currently. No, it's not. Where do you see long? So there is the percentage of total position. So what's the total position right now? Let's see. So only 25% of total positions on the long side is institutions, and we're at 61% on the short side. But just look at, so let's go to December's. Hold on. Let's go to the 3rd of January. So, I mean, you can compare it, but so on the 3rd of January, we're at 25 and 60, right? Percentage of long and shorts. And on the COT report, 250K long, 95 short. Yeah. But just look at the total amount. And then you can't just look at, okay, well, you got to look at what the change is, right? So we're at 25 and 60. Isn't that just non-commercial you take note of? Isn't it just non-commercial you take note of? No, I'm looking at commercials. Yeah, I'm looking at commercials. Yeah. But just keep in mind, right? So you're looking at 25% and 60% of that is in there. Yeah. And then look at current, nothing's changed. We're still in the same numbers. 2561, go to the 10th. But now the key is look at what December's numbers did, right? If we come over here and look at December's numbers, so let's go like 13th of December. We're seeing a 2% decrease in total volume being traded in it. But the key that I looked at was go back to March of 2022, and we're seeing the same exact numbers. Go to like March 8th. We're seeing the same exact numbers across the board on it. So this is where, when I'm looking at it, what they're doing in here and adding in the short positions, this is where I'm looking at it. Yeah. You understood non-commercials are the big boys. Okay. Yeah. For me, I was always taught commercials. Yeah. Non-reportables are I think it's any hedge fund that's trading under 20 million. The non-commercials are going to be, I want to say, any fund. I'd have to look it up again. I'll look it up for you. Ask me next week. I'll write this down, so I'll look it up again. But yeah, I mean, I definitely see the same price action and volume being traded in here as we're getting in here. Yeah. So yeah, and it for me, it makes sense for this thing to come down. But like I said, the one issue I'm having with metals is, gold was always a standard for safe haven, and ever since COVID, it's not been treated as such. This was the last time right here. Hold on. This was the last time that it was treated as a safe haven, right at the COVID start. And ever since then, we're not seeing that. So, yeah. This category includes large institution investors, hedge funds, and other entities that are, yeah, but it's based off of volume. Yeah, it's based off of volume. Yeah, I'll look it up again. I have it written down. Yeah. Yeah. So anyway, I mean, this is what I'm looking at. We'll see kind of what happens. I'm very interested. So tomorrow I'll definitely be on looking. I'll be actually watching the press conference. I would definitely suggest, if you guys have the time, watch some of these central banks press conferences, because they are, I mean, it's definitely going to give you what their thought process and what they're going to be looking at. So, yeah, cool. Does anybody else have any other questions? If not, I'm going to grab some dinner, and sounds good. Awesome. Cool. Well, listen, thanks for hopping on. I'll catch everybody later. Have a great one and trade safe the rest of the week.